Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. Well, yesterday I put out a video turning bearish on the S&P 500, and we'll take a brief look at that. But I wanted to cover all my buy recommendations. The list is getting smaller and smaller, which happens if we are entering some sort of a downturn here. So all this gives clues to the direction of the overall market. But I take each position for what it is. So, the market could go down, but one of the stocks that I'm bullish on and have bullish patterns intact could still do well. And so we take each of those and we build a portfolio by maybe being short the overall S&P 500, but also having a couple long ideas there. So it can give us alpha. So let's get into it. Okay, the first chart here is of the S&P 500. Oops, what happened? And this is just a brief look at the daily chart. And we had an ending diagonal coming up into the top. We have negative divergences with lower highs on our RSI, our relative strength index, as we've hit higher highs, flashing a caution sign, beware a change of trend. We have a potential head and shoulders top here, left shoulder, head, right shoulder, a little bit downward sloping neckline. We have a confluence of moving averages here. So this is called uh, a bearish rainbow convergence, and prices are coming back to that convergence. So now the reason why I think this is a good place to turn bearish is because if this is a type 2 convergence and prices can't get through, let's call it 59.75, then it promises a new low. And if it promises a new low, then it puts our head and shoulders top in place, which is right now just a potential, but that would turn it, that would activate it, and that would give us an initial price projection of around 5,500. And I'm going to link the bearish call on the S&P 500 that I did yesterday for you to be able to view some of the bigger potential downside developments. So that's the S&P 500. Here's the buy recommendations. Copper, which I've had at the bottom of the list over the last several weeks, as it also had a bearish rainbow convergence. And now that we have a lower low, I'm not as worried about that. And we also are right on our support line of a possible ascending triangle with a flat resistance line and a rising support line. So my stop is down here at 24.5, and we had a bullish hammer last week where prices opened the week up here at the top. Interweek sold off, and by the end of the week, prices were back up at the top of last week's price ranges. So I feel stronger about copper right now, and we also have a bullish trend line on the point and figure chart. So I'm a little more comfortable with this than I was a few weeks ago. So I'm reiterating my buy on copper, and this is the ETF CPER. Platinum also, I've been bearish. I mean, I've not been bearish, but I was bullish. Here's a big 3-year symmetrical triangle with our resistance line and our support line. And we got stopped out at 82.66, and I'm reinitiating my buy today at 82.50. And we have a somewhat of a hammer, bullish hammer here. And as long as prices stay above 82.5, I'm going to be bullish on platinum. The next level of support would be down here at about 78. So that's where we're at with platinum, bullish on platinum. Let me go back. The potential here is enormous. If it ever gets through 97.5, you measure base of this triangle and you project it upwards and you got 144. So from 85, let's call it 85-ish, you got a long way up. So, uh, I want to stay on top of this. I think this is a good entrance point. Microsoft, this has been really dicey. And, Microsoft being a bellwether for, the market, the S&P 500, the NASDAQ, all those good things. Here we had not a big, this was a 6-month pattern and nothing like platinum, which is a 3-year pattern. And we had a breakout and now we have a retest. And our initial stop was here at 425. I'm going to lower our stop down to the low of last week of um, of Thursday, and that would be 414.85. And that would also, if we broke that, we'd also break the support line of our triangle. And here we have a bearish rainbow convergence, similar to the S&P 500. We're a day or two away from that. So once these lines touch, the blue and the gold line touch, we'll either get a pause in this downtrend on Microsoft, or we'll get a retracement back to the convergence, and then we see if it can break out. If it can break out, we got a lot of upside, but if it can't, it promises a new low, and that means this pattern failed. And when you get failed patterns, like we're seeing in a lot of things, it's kind of a telling sign that the trend is going from up to down in the overall market. But let's take it one step at a time. I'm still holding this. I wouldn't be surprised to see a little weakness early in the week. Hopefully hold this 415 level and then get a retracement back to this rainbow convergence, this bearish rainbow convergence at 430 or so, and then see what happens. And if I have to exit at that point because it fails, I will. So that's kind of where we're at. Microsoft's in a dicey position right now. FXI, iShares, China, large cap, ETF. So again, we had an inverse head and shoulders here, bullish pattern with a price projection of 39. We got up to about 37. Um, the bigger Shanghai index, which I've gone over in the past, the actual Chinese index suggests a lot higher prices. So we want to stay involved here. Our stop is at 29 and prices are chopping around here. So we'll see what happens. What I like about China is it has a low correlation to the US stock market. And so, it's possible that Chinese stocks could go up while the US stocks go down. The other thing I wanted to point out on this chart is when we hit this high back in September, we had no negative divergence here. We got confirmation of that high. Usually you'll see some sort of a higher high and then a lower high on our RSI to give us a negative divergence. So we're hanging in there with the China large cap ETF. Now, if we get a big up week or big up days, you want to make sure you sell a few shares to lower your cost basis. And then when you get something that comes down, you want to buy those shares back at lower prices. At least that's how I do it. Tencent Holdings, this is a Chinese technology internet company. And again, these are big patterns. This is 2 years in the making, an ascending triangle with the support line coming up and the flat top line. And the price projection here is 81 if it can hold. And it's got to hold 50. That's our stop. I've raised it from 45 to 50. Want to keep our losses small and want to, let the winners run. So everything's still intact with Tencent Holdings. Big upside, big reward to risk. We'll see which way this pattern is resolved. And last but not least, EXCELON. Feel pretty good about this. Even with interest rates going up recently, it's held in there like a champ. Well, let's hope it continues. 2 weeks ago, we got a big bullish hammer where prices opened here, broke down under. Let me back up. So this is a 2-year descending triangle with a flat support line and a descending resistance line, and prices had held above that. And then 2 weeks ago, it broke intra-week, but then was able to close back above, giving us a big bullish hammer on bigger volume. And so, if it can hold that low, uh, which is 36, then, we have potential upside of about 51, which would be very nice. And it has a big dividend. I believe it's north of 4%. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Have a great rest of your weekend.